Michael Carnaval is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnaval and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice. Well, everybody, it's another Conversations With, and as you heard, my guest today is Mike Carnaval. Well, Mike, it's been an interesting month, to say the least.
Yeah, I mean, interesting 2 months, actually.
Yeah.
But, yeah, no, you're right. November was basically the recovery month, you know, after a very bad October.
Yeah.
It's amazing. I mean, the Dow moved from high to low 2,000 points in the month of November.
Wow.
So, I mean, and, you know, it looks like it's going to finish the month positive maybe by 1%. So,
Yeah.
if you slept through it all, you know, you didn't realize
know,
anything didn't ever happen.
And then here we head into Santa Claus month,
Oct-
and that traditionally is good.
December is usually, at least since 1950, has been the second best month of the year.
So conceivably, we could come out and be not in bad shape by the end of the year.
Yeah, I mean, again,
If you even get it all back.
well, that's right. I mean, you know, as bad as October was, you know, you've already gained a good piece of it back, and you know, like I said, going into a very strong month, things may look okay. It might be another positive year.
Yeah, and you know, and when you really look at the whole analysis, there's no better place in the world to invest.
There hasn't
Put your
been,
money-
you know,
no.
for a very long. It's really since 2008, 2009, really.
Yeah.
I mean, you know, interest rates came down. They were able to keep. They've been able to keep inflation low, and that's a big key.
Yeah.
You know, and so.
Well, not only that, I mean, all the Social Security people, they got 2.8%.
Yeah, yeah.
So they're all clicking and,
Yeah.
and jumping up and down.
As they say, they got a raise.
They got a raise. Yeah. And my hand is up. I got mine.
Okay.
So I'm not. And the other great news is the interesting thing is some of the drug costs went down.
Okay, so you're actually ahead of the game.
Ahead of the game, and so
That's usually not the case.
No, it isn't.
right?
Usually, it's wiped out.
Yeah.
You know, but it didn't happen. They held the line on the regular insurance. In fact, it's down a few cents from last year. It was 123 something. Now it's 122 and pennies.
Mm-hmm.
And then I have an add-on that I bought above and beyond Medicare, and my RX plan went from $74 down to $72.50. I mean, it's not a lot.
No, but still,
But at the same
you know,
time, it generates additional revenue.
that's right.
You know,
That's right.
and so
You get to keep that
yeah,
bump up in the cost of living. Yeah.
And I was telling somebody the other day that if it wasn't for the auto industry, about 8 television stations would be out of business.
Yeah.
I mean, I watched the news the other day, and there was 6 car advertising in a row. 6 of them. I mean, Toyota, Hyundai, you know, right down the line. Kia, you know, Lincoln, Chevrolet. I mean, I am so sick of Chevrolet winning J.D. Powers awards.
Yeah.
But I have to tell you a great story. Next week, there's a fellow who writes in the AAA newsletter that comes out every month, and he writes a column on automobiles. And I got a hold of him, and he's going to be my guest.
Oh wow. Oh,
And he's going to come out, and we're going to talk. I said, you know, are those? Did you just buy those? And I said, because every car company, now Ford's saying we have more than anybody.
Yeah.
And that kind of puts
seller.
a crimp in Chevrolet, who claims they show 14 of them. You know.
Every model is
They have,
top
got a
in
Jeep.
that, yeah.
And I said to him, they have. He said, well, they actually create categories.
I'm sure.
You know, initial quality.
Yeah.
That doesn't mean 4 months later it's still
as good.
but they got their reward.
Right.
You know.
Right.
And so he's going to come on and talk about it. So I'm really anxious to have.
Well,
him
it's the same thing with
explain it.
newspapers. I mean, full-page ads for car dealerships. If it wasn't for that, there'd be
Nothing left.
nothing left.
No.
Yeah.
But again, I mean, they're giving them away.
Yeah.
And boy, if they got 2018s
Oh,
left
they've
over,
got, yeah.
you know, they're running all kinds of deals on those.
And all these lines that are going to end.
Yeah. Oh yeah, a lot of them.
They've got to basically give those away, I guess.
They're going to have to. Yeah. I mean, someone who's going to buy a Cadillac CTS.
Yeah.
This is the last year they're going to make them.
Yeah.
Now what do you do?
Right.
You know. So if you can go get a good buy on it,
Yeah.
then it's worth it.
It
you know.
is. It would be. Yeah.
And but it's interesting. So let's chat about where we are and what we look like.
Well, we talked about that 2,000-point swing in the Dow in the month of November. The end result was the Dow gained 1%, and it's up 2.5% for the year. I mean, that isn't bad really for everything that's happened,
No.
and as high as the market is.
That's right.
And if you take the past 52 weeks, it's still ahead 11%. So a lot of times, when the market had that tough period in October, the headline news was, Dow down for the year.
Yeah.
But if you take a look at it over the past 12 months, it was still positive.
Oh yeah.
So I mean, I think.
And even if we have a reasonable December,
Oh yeah.
you're going to be up 3 or 4 points.
Yeah.
For the year.
Yeah, and you may have made maybe 5 or 6%, which
Yeah.
on top of what's happened over the past 10 years, hey,
That's
anything positive
yeah.
is great.
Yeah.
Interest rates actually fell during the month. The 30-year Treasury began the month at almost 3.4, and it looks like it's going to end the month close to 3.3. So, long-term interest rates have not really gone up. It's the short-term rates that
Yeah.
have really gone up, and that's a whole nother concern, because usually when that happens, it's an indication that the economy may be slowing down. So
Right.
that's something you got to keep.
Well, although the chairman yesterday said that he's going to pull back a little bit on now whether that's a direct bow down to the president, or in fact it's the economy is stable enough so that they can do it.
Yeah, well, it's
Doesn't
probably
matter.
a combination of the two,
The market
right?
loved it.
It did. It did. As it's probably a signal that maybe short-term rates are not going up as fast as they have been, because
Right.
ultimately that would be a problem. They call it the slope of the yield curve, and if it gets inverted, that usually, historically anyways, has signaled a recession within 6 months. So, and a lot of people think that's actually going to happen, but time will tell on that. We take a look at those technical indicators. Really, for the wild swings we had in the month, no real damage was done. The 200-day New York Stock Exchange moving average is at 33%, meaning 33% of the New York Stock Exchange listed companies are above their average price for the past year. That compared to 30% a month ago. So no real damage there. Anything under 40 is considered very favorable. So you can see that that's a good indicator. The volatility index a month ago was at 20. It's at 19 today. Anything 20 or over is a positive sign, so that's good. And the last one is the stochastic oscillator. The momentum movement day to day in stocks. It's at 28. A month ago it was 18. Fair value for the market would be between 20 and 80. So it's on the lower side. Again, that's a positive. So, although it was a scary October and we had some wild days in November, if you take a look at numbers, not much to be too concerned about.
Well, the bottom line is, I mean, I don't, depending on what happens between now and the rest of the day, we're looking at 25,400.
Oh yeah.
I mean, 10 years ago, people would laugh at
Oh.
you if you told them it was going to be 25,400.
it's-
They'd laugh at you.
3.5, 4 times
Yeah, yeah.
the increase.
So,
Oh, yeah.
so, and again, all things being equal, we're still heading into December, which traditionally is a good month.
It is a very strong month. Yeah. Yeah.
And I know between the internet and retail sales on Black Friday were way up.
Yeah. Yeah, they were very good.
Yeah, so things are looking good.
Yeah, yeah. I mean, I don't see anything. I mean, it kind of surprised the market dropped as much as it had, but sometimes we compare things obviously to history, and I think one of the things we have to realize or come to terms with is there is going to be more volatility
Yeah.
in the future than there was in the past.
Oh yeah.
Mainly because you got instant information, stuff you didn't you wouldn't know about.
And
Now
not
you
only that,
know.
but we have an unstable situation in our government where there's give and take and fighting and arguing and accusations and until the Mueller investigation is finally completed, I think I mean you get the president ridiculing them and calling them all
Yeah.
kinds of names,
Yeah.
and now some of his old buddies are going to jail.
Yeah. Yeah.
And he's not happy with them because they went in and said everything they shouldn't have been saying. and,
Yeah.
blah, blah, blah.
Yeah. Yeah.
So it does keep people on edge,
It does. It does.
because from a long-term standpoint, what does it look like long-term?
Right.
And I think
Right.
that's
Until that
settles out a little bit.
investigation settles out right, you're not going to know.
You're not going to know. And now we find out today that the Democrats, it really was a blue wave.
Yeah.
They picked up 40 seats in
Yeah.
the House,
Yeah.
which is the largest since Watergate.
Okay.
It's the largest changeover at midterm since Watergate, which was 1970 when Nixon was, 60, Kennedy died in 63. So Watergate would have
72,
been
74?
72 or 74.
Yeah, okay.
That's a long time.
That's a long time ago.
A long time ago.
Yeah.
So you think you look back, that's the biggest midterm swing
Yeah.
since back then. And so it's going to be interesting to see how that works out.
Be interesting to see, whether the hope is you don't fall back to, the old leadership
Oh, yeah.
in the Democratic Congress, because
Yeah.
that's just going to bring back what we had.
Yeah.
They got a chance to, I mean, if they're smart, they got a chance to bring in some new people that could then really help them in 2 more
Well,
years.
but from an interesting standpoint, Richard Neal, who is in fact a congressman for Charlton,
Okay.
and he's out of Springfield, so he's District 1, which is Charlton and West,
Okay.
and he is now, as of January 4th, the chairman of the House Ways and Means Committee, which means he controls all the money, wherever, and now the Democrats control that committee, and the president has put up $200 billion for infrastructure.
Okay.
And so the Democrats are going to be able to
Allocate it.
control where it's going.
Yeah.
And so, and the president, one thing he's big on is fixing the roads, fixing the bridges. He wants water where there's no water.
Yeah.
And he wants these things done. So I know I had a conversation with the congressman, and he said, looks like he's going to give us whatever basically, because we're going to be able to concentrate on fixing up these roads and bridges that we haven't touched for
In
years and
years.
years.
Oh, yeah. Yeah.
And he said,
They're all crumbling.
oh yeah, and he said that's going to be huge because we've got, and he's put the money in, and so we, meaning Massachusetts, is good and fortunate
Should benefit.
because you have,
'Cause you're gonna have a leader.
He's going to be the chairman and controls what they vote on, what they don't vote on, and where it goes, and so it's going to be intriguing. And then the president's going to have a different tact. He's now going to have to start, instead of beating on the Democrats,
Oh, well, he's
going to
gonna-
work with them.
He's going to need them
He's
to,
going to need
get
them
anything
to
done.
get anything done.
Right.
So, because most legislation begins in the House.
Okay.
So anything he wants has got to come out of the House. Although they're trying to get everybody back to Washington so they can get a lot of stuff passed, before the first of the year.
Before, yeah.
So,
Yeah, I'm not surprising.
No.
Right? A
and
lot
then
of things.
major news. Of
Yeah.
course.
I mean, there was a lot of positive news. After you get that big downturn that you had in October, tried to look for some positive things, so, we all don't, go off a cliff. And there was a positive with a CNBC poll that came out this month. 51% of the respondents felt that the gains in the stock market were over. 34% said no, they think the market's going to go higher, and 15% probably didn't know either way. That's a good sign, because history shows usually these public polls are always wrong, usually wrong.
Yeah.
So if a majority of the respondents think the stock market gains are just about done, that's a good sign.
Yeah.
You know, it means they're not, really positive, and usually, on average, they're usually wrong. So that was that's a good signal. We talked about, interest rates earlier. Reuters had a survey, a poll, a little different one. This one was with economists, and half the economists who responded felt that the country could be in a recession by 2020. And I think a lot of that is based on, what's happening to short-term interest rates. They are going up much faster than long-term. And the slope of the yield curve, is right now down to 23.23, 23 basis points. And every time it's been that low, it's been followed by a recession. So that's something to keep an eye on. However, based on what the Fed said yesterday, maybe they won't be raising rates as much, and that could spur growth and may be able to,
Or at least delay. It might delay
right.
anything that might be coming down the road.
Yep. Midterm elections, we talked about that. Interesting thing about that, since 1946, the Standard & Poor's 500 index has gained almost 17% 1 year after a midterm election. So that's interesting. The negative is that's really been, the gains have been getting smaller and smaller. And the last midterm election, which was in 2014, the 1 year return was down to 3%, but it was still positive.
Oh, yeah.
So there's a lot of things there that I think we can look at that, certainly give us hope that, the good times are gonna continue.
And then remember that the Major League, the Red Sox and the Dodgers, Cleveland, the Yankees, Milwaukee, and the Cubs divided up $88 million.
Yeah, it's hard to believe. I mean,
88 million, and that was from ticket sales for the playoffs. And each Red Sox player got 417, it was 416, 880 something. And they had 66 shares. They only have 25 players.
Yep.
So there was a total number of Red Sox players for the year was 40. And the Globe pointed out they haven't got the breakdown yet. They're still trying to get it. But they gave 66 full shares. So the people are now thinking that all the coaches, the manager, they all got full shares.
Yeah.
And then there'd be 8 or 9 other people that are involved with the ball club somehow that got a full share. Then they had, I think, 10 partial shares, and then they had 8 cash awards. And those usually go to the bat boys and the kids that sit down the line, the girls that catch the foul balls. And that the Red Sox were very generous because they voted 66 full shares. And which meant that but the funny part, I think there was either 3 or 4 players who got more money participating in the World Series than they did salary for the year. And those are the ones that come up from Pawtucket.
Yeah.
Because they were making their
minimum.
minimum, which was $385. So they got more money than
It's amazing because a generation ago, these players had to have part-time jobs in the off-season.
I remember in 1951, I believe, we used to go to the ball games, and Bobby Dorr was their second baseman. He was retiring, and the fans for 3 weeks in a row, they passed the hat during the games, and they bought a brand new. In those days, it was about $4,000. But when he retired, they gave him a brand new baby blue Cadillac convertible and presented it to him on the field after the game. And in those days, Bobby Dorr, they made $30,000.
Yeah.
And when you think about it, and to your point, they all had a part-time job.
Yeah.
And I remember it was funny. Satch Sanders, who played for the Celtics, lives over in Sturbridge, and I had him on the radio program, and he was telling me that when he was playing, he was paid $8,000, and his numbers retired, and he played on the teams that won all those championships with Heinsohn and Cousy and all that gang. And he was paid $8,000, and Auerbach would call him in at the beginning of the next year. I'm going to give you a raise, and he'd go up to $8,200.
Yeah.
And he says, I had a summer job.
Yeah.
Tommy Heinsohn sold insurance all summer,
Yeah.
and he said we all had summer jobs. And my wife's father played in the National Hockey League when there was only 6 teams.
Okay.
And when I married Jen and met him, and I said, whoa, I said, do you, and Jen's one of 5 kids. They had no idea that when he played in the National Hockey League, there was only 90 professional hockey players in the world. Because back then, there was Boston, New York, Chicago, Montreal, Toronto, and Detroit. And they only could carry 15 players. And so he was one of the 90th best players. But Ernie was telling me he made $5,100, played for the Rangers, and he had a summer job.
Yeah.
And the second summer, when he worked, starting in approximately the middle of April, and he worked until they go back to camp in September. And the summer job he had was selling heavy equipment. And he made more money
Selling equipment.
selling equipment that summer. And the boss, he said, Ernie, are you really going to go back and play hockey? He said, look at how much you made this summer.
Yeah.
If you stay working year round, you're going to make 4 times what you're going to make playing professional hockey. And he kept his job, ended up being sales manager, very successful. And but I mean, there's a good example of how and now they each player just for playing winning 11 games.
Yeah.
What were they? 11 and 5. So
Yeah.
they played 16
Yes.
games.
Yep.
And they made $417,000 each. You know, and then I think the Dodgers got 300 and some odd thousand.
Yeah.
And it goes down. I think the Milwaukee Brewers got, I don't know, 58,000 each or something like that. But when you think about it,
Oh yeah. Well, TV was the thing that
yeah.
really
TV is, well, that's where the money is.
changed that. Yeah.
But anyway,
The other things, the Fed had an interest rate meeting in November. We know they voted not to raise interest rates. They're going to meet again next month in December. Likelihood is they will raise rates then. Bank of England also met on interest rates in November. They did not raise interest rates. A couple of negative things. Italy produced their 2019 budget. That got rejected by the European Union because it built in a bigger deficit than the European Union said should have. So right now they're negotiating, trying to do something. It's kind of important because Italy was a founding member of the European Union, and it is the 3rd biggest economy in the EU. So you don't want to see that get worse.
No.
Oil continues to fall at a time when U.S. production is at all-time highs. OPEC's going to meet in the beginning part of December.
We don't care anymore.
Well, I mean, there's talk they may cut production, but whether they can or whether they have the power to do it anymore, you just don't know.
And not only that, the point is that they cut production. They're cutting out their wealth.
That's true.
And a lot of them love the money.
They need it. That's how they survive.
So
more revolutions.
it's fun to go buy gas now.
It is. Yeah. I mean, it's been going down almost every week.
I was driving by one the other day, and as I was driving along, I couldn't believe my eyes. They have the electronic sign, and it was $2.59.
Okay.
And then it was around noontime I was driving, and I just happened to be looking up at the sign, and it went to $2.54 while I drove. And just like that, they must have got a call and said, drop it down. And and I saw it today. It was down again today.
And that's good for this time of year because more money for people. If it's not so much a big windfall because you're only saving, but it's psychological.
Well, in fact, one of the things you have to be careful of, people go to Southbridge because there's a couple of stations over there that are less money.
Okay.
And I realized it the other day. I was going to drive to South. I can get it here for my car. I have to put in 91. So it was $2.99 here. In Southbridge, it was $2.89. I was going to drive over to Southbridge, spend $4 to get there. To save $2.
Right. Yeah.
I said, well, wait a minute.
Yeah, that makes sense.
Doesn't make any sense.
Yeah.
I'm going to drive 6 miles,
Yeah.
you know, which is going to cost me half a tank
Right.
or half a gallon.
Yeah.
And what am I going to save?
Right.
You know, so
Right.
you got to be careful.
That's true.
But
That's
a lot of
true.
people don't figure that out.
Don't figure that out,
Oh, it's
right.
cheap. I got to go.
Yeah.
You know,
Yeah, if you're going to be in the area, okay.
that's
but
one
I
thing.
mean,
Yeah, but to
you
drive
have to
to
make
get
a
it.
special trip,
Yeah.
you know, because then you got to drive back.
Yeah. Yes. You got to go both ways.
Yeah. Yeah.
Anyway, and then the economy.
Well, we look at, what I think are 4 major items each month. Inflation, it's rising. For the month of October, consumer prices rose their fastest monthly increase in 9 months. Producer prices had their biggest monthly increase in 6 years. So inflation's now getting close to 3%. The Fed's goal is 2%. So you can see why maybe they're raising interest rates to try to cool the economy a little bit. Leading economic indicators, October was a bad month. The worst of the 10 components was the stock market. We know the stock market had its worst month in, probably 10 years.
Yeah.
But 8 of the 10 components were positive, and the big ones were good. Manufacturing work week was basically unchanged, and that's considered good. And consumer expectations were up. So, we'll have to see in December when the November result comes out to see if that trouble in October had dampened consumers, but it didn't. It didn't during the month of October. Jobless claims, they continue to be very low. We've had 195 straight weeks under 300,000. That's the longest stretch since 1970.
Yeah.
But claims are starting to go up. They've risen now 3 weeks in a row, and they're at their highest level in 6 months.
Wow.
But with such a low point that it doesn't really,
Oh yeah.
it's still
Not that big a thing, no.
Not a big thing. And then the employment report came out, October, created 250,000 new jobs, non-farm jobs. Most economists think the economy needs 150,000 new per month to grow. So we had an excess there.
Yeah.
That's positive. Unemployment remained the same, 3.7. That's the lowest in almost 50 years.
Oh yeah.
And the U6 unemployment rate, that includes people who are working part-time but really want to work full-time. That actually fell from 7.6% to 7.4%. And the last bit of good news was the size of the labor force increased by a lot. Over 700,000 new people started looking for jobs. And history shows people only look for jobs when they think they can get one. So the economic news is still very positive.
I don't care where you go. There's signs everywhere.
Yep.
Hiring. I have a friend who's involved in a company that's enjoying some tremendous growth, but it started about 30 years ago, and she was telling me that one of the supervisors came to her and told her that because the company has now reached that point, each year for the next 5 years, they have in excess of 130 people who will be retiring who started with the company way back
Okay.
and now got their 30 years in. They're at the point where they're going to retire. And she says, so it's going to open up some great people who work there now, have great opportunities to move up.
Mm-hmm.
And she said, of course, every move is more money.
Yep.
So this person was jumping up and down saying, boy, over the next 3 years, going to be 1,000 opportunities to move up in the company
Within the company.
over the next
Yeah.
3 years. And she said, that's just unbelievable.
Yeah.
You know.
Yeah. More money for people.
Yeah, and so that's good news. So
It is.
Things are good.
It is.
And then, of course, stocks and bonds.
Well, we talked about it at the beginning of the program. December since 1950, December has been the second best month
Yeah.
of the year. So we're at about 25,300 or 400 today, with a month to go, roughly. I'm not saying you're going to get an all-time high, but you get some stuff in December that you got that supposedly trade situation with China to start the first of the new year. What if they work out a deal sometime in December? That would be very
Which
positive.
they're saying, they're going to do.
Odds would favor it, right? That could be the thing that sparks us over
Well, you know,
26,000 again.
Even if you get back to 26, 4 or 5. Hello.
Oh, yeah.
You know, what about that? Don't you like?
And it will be another positive year. And
Yeah.
that's really the name of the game,
Name of
right?
the game, yeah.
If you can get a year
Yeah.
where you made money,
You come out ahead. you know.
that's all that
You come out
matters,
ahead.
right?
So, yeah, it's unbelievable. And by the way, now's the time to buy a car.
Yep,
They're out there, boy. They're giving them to you.
they are.
You know,
They're giving them away,
They're
really.
giving them away, boy.
It's
I'll tell you.
it's amazing.
It's incredible.
Yep.
And I was thinking the other day if they'd stop advertising, they could probably cut the price in half.
They could. Yeah,
When you
that's
think
right.
when you think about it.
Oh, yeah.
I mean, they are really promoting.
They really are.
Automobiles. You know.
Yep.
It's incredible.
Yep.
Well, Michael, once again, thanks very much. It's been another very good program, and looking forward to heading into welcoming Santa Claus.
Absolutely.
And we'll
Great
be
time
okay.
of the year.
Yeah, it is. Good.
Yep.
And there you have it, folks. That's another Conversations With.